Alright, guys, so things are getting messy. Bessent is meeting Chinese officials in Spain, and the plan is to save the US economy while extracting benefits from China. Now, remember the leverage Bessent thinks he has. He believes Trump scrambling Europe to threaten sanctions of Beijing is a trump card. But China isn't buying that ploy, and they are beginning to hit back. Now, we have talked about how the probe into US semiconductors will escalate, and yes, it has definitely escalated. The latest casualty is Nvidia. Now, China has officially ruled that Nvidia has violated their antitrust laws. Not a coincidence during the second day of the US trade talks. Beijing wants leverage, and this follows yet another investigation into Texas Instruments. Now, this is actually quite a smart move and is putting pressure on Nvidia as well as the US government. It's a subtle warning to Trump that Chinese markets can be further closed off, perhaps to your last critical export, which are AI chips. So here are the details of the probe, and you'll quickly realize it's an own goal scored by the Trump administration. And this involves the acquisition of Mellanox worth $7 billion. Beijing approved the deal under a strict condition that Nvidia does not discriminate against Chinese companies, and this was back in 2020. Fair enough. But we know what happened. It started way back during the Biden administration. Nvidia couldn't sell their most advanced AI chips to Chinese companies, and this included the H100 chips. Trump didn't reverse that. In fact, he doubled down on it at one point. He's even trying to tax Nvidia 15% to sell chips to China. So Beijing pounds on this point. And this obviously opens up a whole can of worms for Nvidia. We know China really doesn't want them to flood Chinese companies with their technology. And the last thing they want is dependency, especially when Nvidia is thinking of releasing their latest Blackwell chips there. China wants to champion Huawei to build their own local supply chain. Now, Nvidia's stock price collapsed by nearly 4% at one point, and this is very significant for the biggest company in the world with a market cap of $4 trillion. And this shouldn't be that shocking, guys. China accounts for 15% of Nvidia's total revenue, and that is considering the limited amount of chips Jensen is selling to China. So if China pushes this all the way, we could see an embargo of US chips to China, which isn't really a big loss for Beijing. This will just motivate Chinese chips producers to fight harder and accelerate their development. Huawei is going to take things to the next level here. And understand how serious Nvidia takes the Chinese market. Jensen wants to make the whole world dependent on Nvidia's stack, all AI technology to be built on top of AI chips from his company. And if the US dollar controls global finance and trade, Jensen desires Nvidia chips to control technology all over the world. You can call it a type of global reserve semiconductor. But in order to reach that level of domination, you can't miss out on China. And he calls it a $50 billion market, but frankly, it's much more than that. The future there is limitless.
That the American tech stack should be the world standard. Just as the American dollar is the world standard that economies are built on, we want the American tech stack for the world's technology and industries to be built on. And that includes China. And so if you look at China, China has 50% of the AI researchers in the world. They have lots and lots of AI companies, and they have lots of AI chip companies. Without us there, they will obviously have their own alternatives, and they've been growing. And you've seen some of the AI chip companies had record years. Their stock prices are record high.
Now, the crown jewel here is China's big manufacturing capability. At the end of the day, AI has to power something. There has to be some sort of application. Chinese industries are the largest in the world, so the potential for sales there is incredible. And this is the next frontier, and the numbers are truly confounding. It tells us why Nvidia so desperately wants to remain and sell into the Chinese market. It's all about robotics today and robotics tomorrow. In 2023, over 50% of all robot installations in the world were done in China. For electronics, this is 66%. Chinese manufacturers for robots are also moving up rapidly. Now in 2017, market share was only 22%. 2 years back, it's nearly 50%. which tells us Nvidia's real market for AI and robotics lies in China. So when Beijing decided to shock Nvidia with the probe, the share price tumbled. Now it's highly possible that China just wants to cancel major US competitors into their market. It's even more brutal than tariffs because the margins for US AI chips are very huge. And this isn't really speculation, it's strategic maneuvering during a trade war. China is identifying key sectors of the future and they are ring fencing it. And they did it with EVs and now it's going to be semiconductors. And this report is key. A top Beijing advisor is telling the country to ditch Nvidia for their own technology. He calls it lethal for the region to keep emulating and depending on the US for chips. China needs to create a new type of chip that is specifically designed for AI models or accelerators. Two key points. These chips will be geared towards energy efficiency and the ability to scale fast. And this is the big push that is sending Chinese tech stocks to the moon. More importantly, if this becomes reality, then China can leapfrog Nvidia in future tech. Now, all the US sanctions and trade curbs will suddenly become useless. Chinese tech will be able to compete with Nvidia when it comes to industrial and manufacturing markets. And maybe that's why Bessent is panicking and Trump is desperate for a call with Beijing to seal the TikTok deal. And yes, the call is happening, but let's unpack this mess. And a big shout out to our sponsor today, Longbridge. Now, we know how important it is to invest. Inflation is not going to stop, and the best way to protect our wealth is to invest. Now, Longbridge is a MAS regulated investing platform that I use to trade the markets. It's an awesome zero fees trading platform trading app loaded with powerful tools and data to start your investing journey. You can load up on your favorite stocks and ETFs. They also have money market funds that help you earn generous yield as rates continue to stay high. Now, one big trend is the rebirth of China's markets thanks to the trade war. And if you're looking to buy stocks in the Hong Kong market, Longbridge is a good platform to start. You'll be able to enjoy lifetime commission-free trades in the Hong Kong market. Plus, you can also access the US markets and Singapore equities as well. Now, trading fees can eat up a lot into your profits, and what I love is Longbridge's commitment in giving a lifetime waiver of commissions. Now you can buy and sell stocks in the US, Hong Kong, and Singapore markets commission free, and best of all, if you sign up today, there are welcome rewards including free Apple and Nvidia shares, deposit 2 grand for 30 days and execute 3 trades to get a bonus worth up to 800 Singapore dollars. In addition, enjoy an exclusive $18 cash coupon when you sign up and deposit the required amount. Take advantage of commission-free trading today and start building your portfolio. It's time to load up on stocks across the biggest markets in the world. Now, according to Bessent, TikTok is going to be sold to the US. The threat of the ban led to a framework deal with the Chinese. Apparently, the US will be getting TikTok without giving any concessions to them. Bessent will only give promises that future threats won't happen but the current tariffs would stay. Remember guys, this is from the American side. It's important to note that the Chinese readout has not confirmed any deal yet. China's Commerce Minister told reporters that there is a red line in the sand, that China won't sacrifice principles for a deal. So once again, we have an impasse. The US is saying one thing while China is saying another. Now, the problem with complying with the US on TikTok for nothing is not just the app. It's a slippery slope down. The US can always invoke their national security law to arm twist future Chinese tech and acquire it. Now, the plan has always been to switch it to US controlled ownership. Now, Trump, of course, is going to be talking with President Xi on Friday. TikTok will be on the table, but it goes well beyond that. The top priority for the US is trade and the tariff mess. Now, the 90-day truce with China is probably going to get extended by another 90 days. Who would have figured that out? An indefinite extension is on the cards because the US economy just cannot afford for bigger tariff hits. Now, in a recent survey, the tariffs are hammering down on small to mid-sized US companies. And this is perhaps the true effective tariff rate. Half of the respondents say that their costs have climbed by 20% or more. And because of that, the same proportion admit they have reduced shipments volumes by 20% as well. Higher expenses are slowing down imports into the US. Profit margins are squeezed and consumer prices are going up. So it's a double whammy. And when it comes to global trade, US reputation has created as well. 58% of firms are convinced that US reputation has indeed weakened, and this has very big implications. We are talking about cancelled contracts, less buyers for US goods, and of course, de-dollarization as well. Major US banks are already tracking a big decline in exporters demanding dollars. If trade with the US is going to decline, what is the point of holding US currency? And that's why trade is still at the heart of the call. TikTok is important, I get it, but it's just the appetizer for the main course. But to highlight my previous point, if China allows total US ownership, it sets a very bad precedent. But there's another problem brewing in the distance for the US and more specifically the dollar, because the big decision is about to happen today or tomorrow. The Fed rate cuts are coming and it's going to drive the wealth divide even further. In other words, the rich, they're going to get richer and everyone else will get left behind. When the Federal Reserve cuts rates, the dollar is most likely going to fall even further, and this would mean imports get more expensive. For the average family, this is the same thing as higher inflation. I don't care what Bessent is saying, I don't care what Lutnick is saying. 70% of consumers anticipate inflation adjusted income will fail to keep up with prices. And this is after adjusting for inflation, guys. How can your 2 to 3% pay increment keep up with a 20 to 30% price bump from the tariffs? It's virtually impossible. So imagine the pain coming when the Fed finally decides to slash rates going down. It's not going to look pretty. Wall Street and big money, they're going to start scooping up assets and pushing prices higher, including rent. Now, this week, quite a few disturbing news have surfaced. Trump's man Miran has been confirmed to the Federal Reserve Board. He is now a Fed governor. And this man is a proponent of a much weaker dollar to win the trade war. So if you think that power is going to get aggressive, we haven't even seen the main event yet. It's coming. Rates might be at 4.5% today, but by the end of 2026, we could be at 2 or even 1%. And when that happens, we'll see the greatest wealth transfer and collapse in living standards. Both could happen at the exact same time. And here are some facts regarding the Fed rate cuts. It's a reminder that rate cuts are not anchored in reality, especially when it comes to inflation. Trump is trying to goose up this clown economy. Firstly, 100% of the rate cuts where the S&P was at record highs led to even more record highs 12 months later. As we said, when you lower the cost of capital, people on Wall Street will borrow cheap money and fuel the rally even further. Point 6 is just as important. This rate cut is the first in 30 years with core inflation above 2.9% or around 3%. Wasn't the Fed supposed to bring inflation down to 2% before cutting interest rates? Which tells us that the new baseline for inflation is going to be 3%. We already have a fire burning. The Fed is going to throw gasoline on it. It's a disaster. But point 4 takes the cake. Rate cuts are coming amid the biggest AI revolution since the dot-com days. And what do you think is going to happen here? All the US tech companies from Meta all the way to Google will start piling on a ton of cheap money into AI. They'll build out even more data centers, buying a boatload of AI chips. So this rally probably isn't going to stop. Trump basically threw a wrench into the system and everyone out here were all shell-shocked. People who are struggling will struggle even more. Sure, asset holders will be pleased, but make no mistake, this isn't a long-term solution for anyone. It gets even more bizarre when we consider the epic doublespeak from Scott Bessent. The Federal Reserve is among the foremost drivers of inequality in America. By failing to deliver on its inflation mandate, the Fed allowed class and generational disparities to grow even worse. Now, if that's the case, Mr. Secretary, why are you cutting rates at this point in time? Shouldn't you let inflation drop all the way down to 2% before slashing? And Bessent knows it's impossible because of the Trump tariffs destroying the economy. And at this point, I don't know who is worse, Bessent or Lutnick. They both deserve an Academy Award for Best Acting. So brace for impact, guys. This is one nasty ride towards higher inflation, greater inequality, and a collapsing dollar. But let me know what you think. Will China really block Nvidia out of their markets? And how deadly are the US rate cuts coming? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.